Reddit stock is ripping, Trump's SPAC is out. Let's talk about the potential for companies coming public with the team at the NASDAQ. Get a read on the economy as well from Chris Dearborn. He's a managing director at the Market Intelligence Desk at NASDAQ. Chris, great to have you back here on the show.
Oliver, thanks again for thinking of us. Happy to be here.
Absolutely, appreciate that. All right, so firstly, it seems like we've got a pretty good environment for companies going public. Reddit's been well received so far. What do you guys see? How's the energy? Are we going to get more?
Great question. You know, it's been like a long, deep freeze for the IPO market. And right now we're seeing a couple of good names come out. I mean, not just Reddit, but you had Astera Labs go last week as well, an AI chip maker, big returns on day one. You know, you're seeing a decent number of names, though the total number of names is a little bit light. The IPO pipeline is tremendous with over 200 plus names in there. We'll see if they're comfortable coming out. Again, you've got a lot going on with, you know, the Fed, the elections coming up as well. You know, but looking at the markets, I mean, we're trading at all-time highs, and it's not just the Magnificent 7 plus that are moving along here.
Yeah, the breadth is widened out. Folks are expecting the Fed to ease things up a little bit, but of course we keep pushing that back. Interest rates generally have been kind of steady. What would turn the thawing of that IPO ice age into like a full melt?
You know, it's going to be a hard do to get back to where we were in 2022. You know, you had 700 plus listings there. Here at NASDAQ, we were doing sometimes 5, 6 a day. I remember one day we did almost 13 IPOs on the same day. So when you're looking at the number from then, that was an outlier. People were hungry to get out. It comes down to the cost of capital, right? Companies want to raise money in the public market, but is it going to be expensive for them to go public or not? With the interest rates where they are right now and the Fed looking to ease maybe 3 times this year, we're hoping, if you pay attention to what's happened over the last week, you know, that could open up the door there as well. So the quality of companies are good, we think, and we think that they're ready to go. Hopefully we'll see a nice number coming into this early summer, late summer, but we're really excited about 2025. We think 2025 is going to be a gangbuster year. Again, 700 plus might be a stretch, but the numbers could be much, much bigger than anything we've seen for the last year and a half combined.
That's important because it's basically a lull. You've got the COVID bar, which is like a really hard one to beat. That's the time period you're referencing from 21 to 22, where after we came out of that, well, we didn't really come out of the pandemic yet, but we had a bunch of money dumped on our heads. So now that that's our standard, you know, looking at a Fed holding, cutting might be really kind of the juice that gets the gravy flowing.
It really would. You know, there's appetite for risk when you're seeing a number of items come to play, right? If you have a loosening of rates there, you've got appetite. I mean, take a look at what Bitcoin's been doing recently. Even though it's pulled back, it's recently made a new all-time high. That's an appetite for risk. If there's appetite for risk not only in the markets, and then you look at other alternative items, why wouldn't there be appetite for risk in the IPO market as well? It makes sense that would follow suit. We just need the companies to feel comfortable coming forward with it.
Fair enough. All right, when you look at the economy, what are the main things you're watching right now as you kind of gauge that strength, that ability to keep the euphoria, the froth going?
Right. You know, it's been a wait-and-see Fed, right? They've been data-dependent. They've been telegraphing that for years. What we're looking for here, though, you've had some stickier inflation numbers for January and February, but we got a full slate of items coming up. You know, with the markets being closed Friday and the PCE data coming out Friday, we're going to get a good look at the data. People are going to be able to digest it. So we'll see what the trading impact of that is on Monday. But also you've got CPI next week. You've got non-farm payrolls coming out on Friday. You actually get the Fed minutes in the middle of the week on the same day as CPI. So a lot of data to digest. If the CPI numbers and the PCE seem to be a little bit stickier, you know, the question is going to be brought up, and there's going to be a lot of Fed speak out there because earnings is done. So it's going to be really macroeconomic data that's going to move this market here for now. Is that going to change the narrative? I mean, basically, we're only one dot away from being 2 cuts instead of 3, and we'd be talking a whole different game in the markets right now.
Fair enough. All right, love it. Chris, thank you very much. Looking forward to keeping up the chat.
Anytime. Thanks, Oliver.
Yes, sir. Christopher Dearborn is Managing Director at the Market Intelligence Desk at the NASDAQ. All right, the thawing of the IPO freeze the last year and a half.